It really is a tremendous pleasure and honor to be here as an inaugural speaker. I am an admirer of Mr. Kelleher and a frequent user of the airline he helped pioneer. And not incidentally, Southwest really was, sorry, as I try to plug in, this is always the case that when you're with MIT, it's always the technology that screws you on. So, there we go. And do we have the remote? Ah, there it is. Excellent. So we have the remote, but we don't have the picture. That Southwest is really an organization. Anybody here from Southwest? It is, since I didn't have firsthand or case study experience with them, I didn't make them a feature or focus of my latest book, but I did refer to them at some length in my Who Do You Want Your Customers to Become book. It's a very interesting culture. It is a culture that promotes many of the theses and themes that I'll be discussing and sharing with you this evening. So I was at a bit of a loss as to what would be of the greatest appeal here, so I decided to repurpose one of the talks that I do with organizations. I don't like giving talks so much as doing workshops. So think of this as a quasi-pseudo workshop area, because I really believe in participation. And in fact, the title is Why Good Ideas Are Bad Investments and How Innovation Really Gets Done. But this is really my most important slide. The content of the audience is more important than the content of the talk. If there's something that I say that requires amplification or clarification or outright disagreement, please feel free. This is a nice human scale number of people and layout here, so I would be delighted to increase the level of engagement in this regard. This is, I just want to say by way of, I don't know if confession is the right word, but disclosure. If one were to look at some of the Amazon reviews of the book, people are very upset that I'm critical of good ideas. And some people think I'm just trying to be provocative for the sake of being provocative, but that's really not the case. I'm actually prepared to say, and this is not going to be the entire theme of the talk tonight, but it is an organizing principle for it. When I go into organizations, be they a large organization, medium-sized organizations, or startups, entrepreneurial startups, one of the single things that is most destructive to a healthy culture and to a healthy dialogue is a celebration of good ideas. Is a celebration of good ideas. Good ideas really are bad. Good ideas are distortive. Everybody in this room has been excited about a good idea or become excited about a good idea. And what happens a day, a week, a month, 6 months, or a year later? Well, it seemed like a good idea at the time. And there's a certain, for those of you who are familiar with the behavioral economics literature, which we'll come to in a moment, there's a certain survivorship bias in that the good ideas that ultimately turned out to be good ideas are the ones that we celebrate and focus on. But if we were to really look, and I have, if we were to really look at these suggestion boxes and good ideas and see what portion of them survive, let alone and analyze the opportunity costs associated with them, you will see that good ideas really are poor investments, very poor investments. And we're going to explore why they are poor investments. Because I'm going to offer, it's not enough to be a critic, one has to offer a useful, usable, affordable alternative that is better than, quote unquote, good ideas. So content of the audience more important than the content of the talk. And it's important that you understand my bias here. As I mentioned to Professor Rendova's exec ed class this afternoon, I am not, by nature or nurture, a people person. I like people. Some of my best friends are people. But I am not the person you go to for motivation, inspiration. I'm the kind of person who goes to MIT, basically. And We like people there, but that's not our core competence or our core capability on this. So what I have done professionally and academically for, almost 20 years now, I began as an economist, economics, computer science, fairly good in both those. But I swiftly moved out of microeconomics because microeconomics, as you're all alums here. How many of you had to sit through economics courses? All of you, right. And economics is altogether now a normative science, how people are supposed to behave. You're all in the real world now. How helpful was normative economics in modeling? Not very. And so I became very attracted to the work done by my colleague, who's now at Duke, Dan Ariely, who wrote Predictably Irrational, Richard Thaler, Behavioral Economics at Chicago, Nudge, and Daniel Kahneman, who won the Nobel Prize. Great book, thinking better than my book, but terrific books on usable economic insight. But so I began looking at innovation not as a function of, how do we get our people to be more innovative? And I began looking at what are the models, prototypes, and simulations that individuals and organizations build to manage innovation and risk? What kind of experiments do people run on those models, prototypes, and simulations to gain insight, to better understand what it is they're trying to do, the value that they're seeking to create? What happens when you start viewing, what won Nobel Prizes for Ronald Coase in economics was viewing the organization as a market. I'm saying, what happens when you look at models, prototypes, and simulations as marketplaces? What kind of experiments in price discovery and value discovery can you do? That turned out to be really interesting, led to a book. And it allows you to become interdisciplinary and multidisciplinary, because that's what a lot of engineers and organizations do. They build models and prototypes. And it was easy for me to go into an organization and say, hey, you're building this stuff anyway. How do you get more value from it? And that pretty much launched the trajectory of my research. OK? So with that in mind, do you know what this is? I'm from Chicago. This is why I'm showing it. You know what this is? It's the Picasso. So it was designed and not built by Pablo Picasso. It was given as a gift in Chicago. It was in 1967. I was a little child when that came out. And it originally caused a bit of a stir, but this is a Chicago artistic landmark on this. It really has changed the notion of public art. It did change the notion of public art. How important is it to know how much the Picasso weighs as an impact? Probably not very. What would you think if somebody said, well, we're discussing the Picasso. It weighs 162 tons. Is that interesting data for you? No, I don't think so. For those of you who prefer more contemporary art, this is a Jackson Pollock. Not a fan. Suppose the reviewer, the critic, says, well, there's the art. How much is the paint? He tells you how much the paint costs. How insightful a reviewer or critic or analyst is this person? I mean, it's a factual bit of information. How important is it to know the cost of paint for abstract expressionists? Any volunteers on this? Okay. I am here to say that the unit of analysis for how you choose to discuss and analyze things is very important. Good ideas are the wrong unit of analysis for discussing innovation. They're the wrong unit of analysis. You will have as useful, a constructive, a conversation around what is a good idea, what big idea do we need to become innovative, as you would about how much did Jackson Pollock or Turner or Sargent spend on their pigments and their brushes? What's the budget for the painting? Okay? It's that kind. It's not a stupid conversation because the cost of things is almost always relevant. I'm at a business school, so accounting and finance clearly matter. But is it the right unit of analysis for discussing these things? I'm saying no, and I'm going to prove it. But before I do that, I want to kick one professional organization in the shins. A few years ago, I was invited to give a talk to Informs. Any OR folks here? Excellent. So you should feel free to heckle in this regard, or if you don't want to heckle, to disagree or see if I'm being too much of a cheap shot artist in characterizing this. But Informs, it does operations. In the UK, they call it operational research. In the US, it's operations research. And it's basically, linear programming. What is the suite of mathematical techniques? Pretty much focused on optimization. And Informs was doing this enormous, and Informs, what's important about Informs is that it's not just the academic group, it's the convergence of academic and real-world practice. So it's not just thumb-sucking, it's actually, application of these equations, these math to the real world. And the focus is analytics teams. Analytics teams. We have data. How do we analyze the data? And the whole skew of operations research in the last 4 or 5 years has gone to OR, operations research means analytics. Applying science to the art of business. Analytics, 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 analytics. This defies, cheats, and insults the history of the discipline. If you look at World War II, where OR began, the most interesting insights in operations research emerged from simple experiments. They didn't ignore data, but they were doing simple experiments to look at underlying causal mechanisms. But because we have, if you'll excuse the technical phrase, crap loads of data, aka petabytes and gigabytes and terabytes, people are focusing on analysis. I submit, ironically, analytics is the wrong unit of analysis for innovation. I think one of the most important things we need to do is figure out not just how do we do a better job of structuring problems, but structuring participation in how we address those problems and how we exploit opportunities. And what I came across as a direct extension of my work in looking at models, prototypes, and simulations is how do we get cross-functional, multidisciplinary, small teams of people to collaborate, to interact around the design of fast, cheap, and simple experiments? How do we move OR away from optimization and analytics platforms to experimentation and participation platforms? And this has led to the work that I've been doing with organizations pretty much for the last decade now. I help organizations design, note that I don't say implement, I help organizations design fast, frugal, high-impact business experiments that make innovation simpler, safer, and scalable. That's it. That's sort of my mission statement in this regard. And it turns out that this is really, and we'll go into this in a moment, really culturally disorienting for a lot of organizations. You know why? A lot of the people who run those organizations have MBAs. What do MBAs spend a lot of time doing? Charts and analysis. Analysis. How many experiments did you have to design and run to get an MBA? I'm thinking of a number between 0 and 5. Anybody do more than 5? So we have, and forgive the use of this word, we have institutionally, organizationally, and culturally, I'm not apologizing for those words, an epistemological bias against experiments in business. That is a bad thing. It hurts and undermines not just our ability to innovate, but how we think about it, because it's not one of the units of analysis that we're doing. And that's what led to my book, which I will not flog, I'll just show you them. But what is this talk really about? It's about what does it mean to invest in innovation in a smart, creative, dare I say, innovative way. I talk about innovation, let me define my terms. I'm one of these people who believe in defining one's terms. Innovation is the conversion of novelty into value. Okay? This is a nice operational definition. So whenever anybody says to you, ooh, this is really innovative, you have to be able to divide this into three parts. The first part is, what's the novelty? To whom is it novel? Where's the value? Who gets the value? Is it inside the organization, outside the organization? And what's the conversion process? Is it something we manufacture? Is it something we code? You know, so no money here. Is it new? To whom is it new? Is it valuable? To whom is it value? How do we convert it? Okay? And the other is innovation is a means to an end. This actually upsets a number of my colleagues at MIT because oftentimes they believe innovation is the goal. But I can convince you with a very simple thought experiment that innovation is a means to an end. The overwhelming majority of you are in business. If I told you that you could have, I guarantee you for the next 3 years, double-digit compound annual growth rate, only under the condition that you don't invest, that you don't do anything new, how valued would innovation be for you? We innovate as a means to an end. I swear to you, when I get a call from an organization that says, Michael, we need to become more innovative, I swear to you that my first response to them is not, that's wonderful, how much do you pay? My first response, by the way, I ultimately say that, but my first response is, what for? Why do you want to become more innovative? What is your strategic goal? What is your strategic outcome? What is your strategic imperative? What do you want the outcome to be? Is innovation a spice? Is it an ingredient? Or is it the whole meal in terms of the way you want to achieve your strategic objectives? Oftentimes, this question is the one that leads to the most valuable conversations because the organization comes to grips with the notion of how it wants to convert novelty into value to accomplish its avowed strategic goals. Okay? I became very interested in the notion of experimentation and experiments as a means, as a medium, as a mechanism for new value discovery and creation. What kind of an investment? By the way, I just want to step back and say, I'm not anti-analytics. I'm not anti-ideas. I just want to make sure we have the right kind of, with apologies to the finance folks here, I just want to make sure we have the right portfolio management appropriate, fit for purpose for the kind of investments in innovation to achieve our strategic outcomes. Now, everybody here is familiar with experiments. You know, Roger Bacon, Francis Bacon. Why are they all named Bacon? The history of science, experimentation, novum organum. Experiment. How many of you two are science people in background? A couple. Excellent. So experimentation in science is a search for truth, or at the very least, if you're a Popperian, falsifiability testing, these things. Science is a search for truth. Experiment is a medium to test theory as a search for truth. That's wonderful, but it's not business. Experimentation in business isn't a search for truth. Experimentation in business is a search for value. Now, value and truth are not sworn enemies. They're not opposites. They're not completely or distantly unrelated. But they're different. They're different organizing principles. I think I can look all of you, each of you in the eye and say, having a search for value, a test for value, requires a different design sensibility than a search for truth. I'm going to make another point that I'm pretty sure nobody in this room is going to disagree with. I grew up in a science household, and I read journals, and as an adult, I read the science journals. Do you know what you almost never, ever see in a paper published in PNAS or Science or Nature or Cell? or IEEE, what do you almost never see when they run their experiments? What do you almost never see? Exactly, cost. You never see the budget. You never see a budget. In fact, there's almost a perverse pride in the cost is irrelevant to the experiment. Of course, there's big science, but the cost, we're not going to show you the budget on this sort of thing. What do you always see when somebody runs or proposes a test or something in a business? A budget. Clearly, the organizing principles and the culture associated with experimentation in world-class science and world-class enterprise are different. Now, there are certain core values and themes are the same, but the most important point I'm trying to communicate here is value as an organizing principle is different than truth as an organizing principle. So, organizationally, operationally, and culturally, is your enterprise appropriately investing in experiments and experimentation? That's the challenge. What does appropriately mean? You know, I could ask the same question of a fund manager, a pension fund manager. Are you appropriately invested in this kind of an asset class? Are you doing venture capital or unusual assets? It's an asset allocation issue, if you want to be kind of strict on this. And is it a diversification mechanism? What's the nature of the, why do you do it? There are cultural issues here, not just, ooh, how do we get our Sharpe ratios aligned here? So my call to action, you know, and I'll accelerate a bit here, is I want you to explore how do you experiment with experimenting, not just in your own organization, but with business partners. That's the one social message. I don't want this to be just an internal issue. I'd like you to come away saying, you know, we like this supplier. We like this customer. We like this client. What kind of fast, simple, high-impact experiment could we do with them that would really give us great insight into a potential value situation? Not discovering new truths, discovering new value. Why are we doing this? Because it enables us to create a different kind of conversation. What kind of experimentation should we be encouraging? So what's our structure for the rest of our time tonight? I want to talk about experiments as investments. I want to talk about experimentation as a discipline. And I want to talk about experimentation as a future. And by the way, I'm going to double down on what I said earlier. Any questions, comments, concerns, feel free. Okay? Because of my interest in modeling, I was very interested of some of the quote-unquote experimentation done with derivatives, structured investment vehicles, blah, blah, blah. I became very interested in investment risk management. I'm from the University of Chicago background, and in the same way there's no such thing as a free lunch, there's no such thing as a riskless innovation. I think it is foolish to discuss innovation divorced from the kind of risks it creates. In fact, we did that in the financial services world. We had very innovative instrument designers over here, and we had a chief risk management operation over here. You know, by the way, nobody's stupid. Nobody's stupid. Very innovative, good risk management, and at the very top of the organization we have boards of directors that didn't quite understand the innovations and didn't quite understand risk, and we've all lived through the aftermath of that. So I'm very interested in how do we design things where we can identify risk as part of the way we design and discuss innovation. And this is my model for this. At the risk of name dropping, Mr. Buffett, in a previous life, I was a reporter for the Washington Post, back when it wasn't an embarrassment or being owned by Amazon. And Mr. Buffett was, by the way, when I was told by my brother that Jeff Bezos had bought the Washington Post, I said, stop joking with me, you know. But talk about disruptive innovators. Mr. Buffett was on the board of the Washington Post company. So one of the perks I had as a young reporter is that I used to be able to call up Mr. Buffett. And one of the smartest things I did was, you know, he encouraged me to read his Buffett shareholder letters, the Berkshire Hathaway shareholder letters. Have you read those? People? Yeah, exceedingly well written. Carol Loomis, who was a colleague at Fortune, helped edit and write those. This is a guy who understands value. He understands truth, but he understands value. And he's a value investor and a wonderful definition of value investing. Value investing is, how do you buy $1 for 50 cents? Because anybody can buy $1 for $1. And buying $1 for 90 cents or 85 cents, not much of a margin in error and not much of a return. So here's my trick question. What do you call buying $1 for $2?
Government contract.
Government contract? Very, very good. And I am in Texas. Very close. Buying $1 for $2. You win the Spirit of the Question Award for tonight, but not quite there. You're almost there. What do you call buying $1 for $2?
Investment.
An investment, not a good one, yes, but it is an investment. What do you, you're also close in spirit, but that's a sibling, you're a cousin in that regard. What else? What do you call buying $1 for $2? Come on. Sorry? A bad investment, yes, that's technically you're accurate, but not nearly as funny. All right? Stupid? No. I'm sorry. Buying $1 for $2 is called strategic. That's always a sure laugh in an MBA crowd. How many of you were at McKinsey? No, just kidding. Okay. I'm one of these people who don't believe you pay a premium for quote unquote strategic investments. That I have a very good mentor in that regard. So in the spirit of good artists borrow, great artists steal, I've taken Mr. Buffett's value investing notion, value innovating. How do you get $1 worth of innovation for 50 cents or less? I think that's the kind of organizational and operational question where there's real value to discuss. So the challenge I offer organizations is, how can we make a $5,000 experiment worth $100,000 in fewer than 100 days? How can we get a portfolio of $5,000 experiments to unlock $10 million of value in a year? Those are the kinds of constraints I'd like you thinking about. Those are investment constraints. What kind of experiments can give us, geez, $5 or $6 worth of insight for $1.50? Why can we do this? These gentlemen. I realized as I looked at this, I should have put Jack Kilby in here because of, Texas Instruments, and he also got the Nobel Prize, but I'm an MIT guy and I have to be loyal to my locals. Moore's Law and Metcalfe's Law. We can take advantage of the exponential economics of digital media and technologies. There is a fundamental disruption in the economics of experimentation. Everybody who has a mobile phone can download an app that turns it into scientific or marketing instruments. We are just, what's the line about World War II? We're just at the end of the beginning of the kind of experimentation that we can do through the kinds of devices and networks we're investing in developing. So let me put it this way. Price is what you pay, value is what you get. The price is what you pay for the experiment. How do you get value from the experiment? And this is where I believe things are fundamentally shifting. For a variety of organizational and institutional reasons, we have, if you'll feel free to hiss at the use of this word, we have privileged analysis and analytics over experimentation in the way we do business. I'm saying the lower cost of experimentation means we're not just moving along the curve, we shift the curve. We are bad investors if we do not take advantage of experimentation versus analytics as a way to manage innovation risk. I like to call this the 80-20-20 vision, and this gets us to the discipline aspect of it. Everybody in their mind has a point where they know they'll have 100% of the information they need to make a go, no-go decision on something. And you do the analysis. I am asking you to consider the following. What experiment can we run? What hypothesis, and this is going to be the key, what hypothesis might we test that might give us 80% of the essential information and insight in 20% of the time with but 20% of the resources? This is what I ask analytics organizations to do. I'll name a name. Anybody here at P&G? No? One of the things they did with one B&T is a large organization. They are superb analysts at P&G. They love analytics. They love data. Give me more data. Give me more data. Ask them to do, they'll do a big scale test. Getting them to do a smaller experiment is more difficult. The simple change we made was insist that people propose a cheap experiment. Make them go through the discipline of designing something like this. They don't even have to run it. But you can see what level of thought and rigor goes into it. Risk comes from not knowing what you're doing. What is the purpose of an experiment? To give you some insight into what you're doing. Experiments are not just media and mechanisms to create innovation opportunity. They are vehicles to de-risk innovation. So we move away from the notion about how do we optimize something to loss aversion. How do we minimize loss aversion? So the metric I tongue-in-cheek want to propose to you is if you really care about innovation management and creativity, in finance, this stands for risk-adjusted return on equity. I want you to think of it as, what do you want risk-adjusted return on experiment to mean in your organization? This is the myth I despise. This is what I want you to replace it with. Good ideas are bad. Testable hypotheses are good. When somebody says to you, some bright, eager person, colleague says, I've got a great idea. By the way, I think ideas have the best brand in the world. I've got an idea. Idea is a good brand. If I said I had a hunch or a notion or a belief, you'd be skeptical. No, I have a good idea. I have a good belief. I have a good inference. Doesn't sound as good. Good idea, great brand. Sorry, just a digression. If somebody says, I have a good idea, say, that's wonderful. Come back with a testable hypothesis. It's a good idea. Turn it into a testable hypothesis. Insist, you want to really transform your innovation culture? Forbid good ideas, enforce testable hypotheses. Get people to communicate, coordinate, and collaborate around the design of testable hypotheses. Now, we'll talk about the quality of those testable hypotheses, simplicity, clarity, the ability to design experiments that are, because let's be blunt, to have a testable hypothesis that costs $1.5 million to do, that's, unless you're DOD, those are really, how do you design, come up with testable hypotheses that lend themselves to fast, cheap, and simple experiments? But the most important cultural step, if there's a single joke-intended idea I want you to come away from with this is, what happens when we start getting people to talk in terms of testable hypotheses? How does that change the way we don't just think, but the way we behave? Let me give some real-world examples of this. And this is cheating. What I'm doing is cheating because I'm doing the classic B-school thing of giving you examples, confirmation bias that prove my point. But these are pretty good examples because they're pretty simple experiments. Everybody here knows Google. Google grew up in experiments culture. Lord knows what's one of Google's most popular products? Google Analytics. But Google itself internally does a lot of experiments. Marissa, she went from in the interest of full disclosure, I did some work with Google some years back. interesting, just to digress off of a digression, this is an experiment they discussed about 5, 6 years ago. This is the stuff they discuss. What they don't discuss is the really interesting stuff. So Marissa was running Interface at the time. I like her. I think she's terrific. And Google is very customer sensitive. And they were asking their customers, what do you want more from Google search? And virtually every single focus group they had said, you know what we want from search? More. Give us more. Give us more things. Give us a better list. Okay? So Google did more. And people were abandoning the search. People left. They did a couple of them, and then they left. There was a drop-off of traffic when they gave people more. Long story short, in the course of giving people more, giving people what they said they wanted, they discovered that, this is a decade ago, they disclosed the experiment 4 or 5 years after, they discovered that downloading more stuff, took more time. A half-second delay led to a 20% drop-off. And if you're an advertising-based organization, that's a huge drop-off. They didn't want more results. They wanted faster results. Now, why is this so important? If you are Google and you are running literally billions of searches a day all over the world, do you think it's easy to deliver sub-second response time? No. So if you had decided to engineer around more presentation rather than faster presentation, you would have made an architectural decision, those of you who are familiar with DevOps, development operations, that would have crippled you for years. And the cost of re-engineering would be measured in the billions. This was a huge insight for them to have. And everything, and you know this when you do a search, that they tell you how long the search is. They're optimized around speed. Yes, they care about quality of search. They care about speed more. Split A/B testing, big deal. By the way, just as a quick aside, when I was in school, when I was studying CS, no IT shops ever did real-time experimentation with customers. Your production servers were for running the business, and you had some other servers running experiments. That part of the genius of the Googles and the Amazons of the world is that they have designed, they've engineered their systems so they can run experiments off of their production systems. It's a meaningless, it's a distinction without a difference. We can run an experiment, we can run a test, we can provide you with what you need. So I mentioned Amazon. There's Jeff Bezos. How many of you use Amazon? Of course, all of you use Amazon. How many of you have been influenced by Amazon's recommendation engine? Virtually all of you. Huge thing. Do you think that the Amazon recommendation engine was the product of Jeff Bezos' brilliant strategic thinking? No. It had to be done over internal opposition. You all know how to read, so I won't read it for you. But this is Greg Linden. He's a casual friend of mine. And he did Findora. He went to Microsoft. It was a debacle afterwards. Great guy. Launched the recommendation engine. And Amazon tried to kill it. And here's one of the important lessons I've learned. They were trying to kill it for a good reason. Do you know what the reason why they wanted to kill the recommendation engine? Because if you were making recommendations after people had put stuff in the basket, they might abandon the stuff they put in the basket to search. It would cost them sales. And so the way they overcame this was, not unlike the split A/B from Google, they designed experiments so that they calculated that the value of the information they would get from running the experiment would be greater than any abandoned sales, abandoned shopping carts. They realized this work. It scaled into something that has been transformative in the internet and the entire Web 2.0 world. This is my story. It's a local story, right? Blockbuster. And my meetings with them were not in Dallas. They were in their Viacom days in New York, in the Viacom building. This was the most, I write about this in my book, this was the most traumatic business experience I've had as an adult. Over a decade ago, 1999, 2000 timeframe, Blockbuster was doing reasonably well, but there was this startup called Netflix. And do you remember the original Netflix advertising campaign before they discovered streaming? It was no late fees. Every single survey that Blockbuster did of its customers said, we think you're great, you have a good selection, we hate late fees. We hate late fees. We hate you because of your late fees. And here's Netflix, they're looking at, Blockbuster realized this is not a good situation, this wasn't sustainable, what can we do? What can we do? So they basically cast out the consulting net, and I was one of the poor little fishies caught in that consulting net. And they wanted, how do we solve our late fees issue? Now, in the interest of full disclosure, some of you may be familiar that up to 20% of Blockbuster's pre-tax profit came from late fees, which is a wonderful business model because you do nothing and you get paid for it, which I would like that as a business model. But they were smart enough to realize it didn't work. I was one of the people that said, deal with this. So I went to Blockbuster stores, remember, 1999, 2000, went to Blockbuster stores, and I came up with, because I don't know if it was McKinsey, but they were expensive consulting firms. So my view is, my differentiator was, I'm going to give them real value, real fast, real cheap. I'm not going to propose a multi-million-dollar thing. I'm going to differentiate myself. Lord, what a fool I was. I go in, long story short, I say, ask people, do an A/B test, ask people for their email address. No spam, no promotion. Say, we will send you an email the night before your video, because that's what it was in those days, falls due. We'll remind you. Customer relationships management. See how it affects return rates. Because my behavioral economics background suggested that people hated Blockbuster because, oh, I forgot to do these things. But if Blockbuster reminds you and you still bring it late, you're not going to blame Blockbuster. You're going to blame yourself. So at the very least, it would buy you good brand equity, customer sensitivity, blah, blah, blah. And remember, 1999, 2000, you get the email address, beginning of a CRM system. So I think I'm pretty smart doing this. And I present in New York. And these people look at me like I had peed on my carpet, on their carpet. They were not going to do this experiment. I had made costs. They just didn't want to do the experiment. And I will never forget the guy saying to me, Michael, it's a really interesting experiment, but it doesn't solve our problem. You haven't solved our problem. I've given you a $10,000 experiment that can have a you haven't solved our problem. Now, some of you may know that ultimately Blockbuster came up with a solution that led to not one, not two, but 3 settlements with attorney generals in various states. And ultimately, the company went bust. And yes, did I feel a bit of schadenfreude when they went bust? Yes, I did. Yes, I did. But the most important insight I came away from that was, I removed cost, I removed complexity, but there was still resistance. I'm of the view, as I get older, that if we really want to understand an organization's innovation culture, yeah, we can look at the people, yeah, we can look at the business. I think you learn a lot by understanding the nature of resistance. You can always say, when somebody proposes something interesting, oh, that's too expensive. Oh, that takes too long. I was interested in designing experiments that removed those variables. We can't do that because if you want to understand your organization's innovation culture, resistance is the clearest window. You propose an experiment, you have a testable hypothesis, we can't do that because. Whatever follows, we can't do that because, that's your innovation culture. I discovered, literally by accident, that experiments, cheap experiments, simple experiments, fast experiments, were incredibly valuable as resistance diagnostics. You learned what people just wouldn't do. Sometimes the resistance is rational, a la Amazon. Sometimes you just can't understand the resistance, as was my case with Blockbuster. I'm of the view that the greatest frustrations that you're going to face in your organizations, if you adopt the lightweight, high-impact experiments methodology, it's not going to be technical or financial. It's going to be organizational and cultural. Those are the big challenges now. The era of saying costs too much, takes too long, that era is fading away. That's why there's so much disruptive innovation. How many mobile phones does Uber have to sell to make Uber work? Oh, wait, they don't have to sell any of them. You've already got it. When you do an experiment, are you experimenting to extend your values? Between you and me, I think Blockbuster would have liked something that would have allowed them to collect late fees, but look like good guys doing it, or to challenge them. This is one of the most important cultural dichotomies I see in organizations. Does top management enjoy testable hypotheses that challenge cherished assumptions, or do they want to see a portfolio that extends and builds on what they're already doing? And that's why I think culture is more important than strategy here. Purely anecdotally, I would say that experimentation, when I've done it with organizations, has been far more revelatory of cultural values than of strategic intent. And the real challenge that a lot of organizations have is, how do we align them? How do we align them? One of the companies in Vili in his class today is USAA. That's a values-driven company. I think they're going to be doing the kind of experimentation that aligns pretty well with their values. I think that'll be true for the Emerson folks as well. So I think that if we really care about the transformation of our innovation culture in a way that is cost-effective and manageable, is we need to think of ourselves not just being in the innovation business, but in the experiments and experimentation business. I want you to think of yourselves as the CEO. What's the CEO? The Chief Experiments Officer. Yeah, please.
If you were starting from scratch, are there
starting from scratch?
A company which are there organizational changes you would make to enable an experiments culture? Would you set up an organizational design differently?
That's a great question. I think if you're doing a startup, it's less a matter of organizational design than cultural sensibility. I think it is the difference between I'm coming to you with forgive me, I'm with a group of business school alums, but the overwhelming majority of business school alums bring what to top management when they propose something? A plan. A plan that is supported by analysis. And by the way, full marks. They're usually good plans with good analysis. How often, and then after you do the plan and the analysis, how far in the future is the first, altogether now, test? Back to behavioral economics. What is the purpose of the test? To confirm the plan. Are we beginning to sense a bit of a thumb on the scale here? My behavioral economic insight to you is, and I'll refer to this later, is if you do an experiment that's sufficiently fast and cheap, there's no such thing as failing. It's not failing. It's not failing. The problem with the way we do things in most organizations is you can't afford to have the pilot fail. It's too high. The problem is not failure. The problem is the cost of failure and the perception associated with it. So what you want when you're doing a startup is, okay, what's a cheap experiment? We're happy to do that experiment. We're happy to do that one. Google did that experiment. Didn't cost very much. Amazon. how do you do, and here's what this is a term of art. I think I allude to it later on, but I just want to communicate it here. The reason why design of experiment is a craft and an art and not a science is this. You want to design what I call no-lose experiments. This is what you want in your startup. This is what you want in your Fortune 100 company. What's a no-lose experiment? Management, top management, passionately cares about the outcome, but you will learn a lot no matter which way it tests out. Google did a no-lose experiment. If it had worked out that people didn't abandon if they got the longer list, that's good for them. That's good for them. How do you design an experiment? I'll give you one that I did. I was on the board of Ticketmaster when we owned Expedia. Spun off now. Just checking on the time. Quick story. Families like sitting together. The question, and you see in planes people trying to swap seats. Logical question. Would people pay a premium to sit together? You go into the site, you buy it, you say n is greater than 2. Question pops up. Do you want to sit together? Yes. Do you want to spend $5 extra to sit together? Extra leg room, sit together. People were saying, I'll pay to sit away from my family. But that's a separate market segment. It's a no-lose situation for you here. Will people pay a premium? Now, it's complicated as you want to do. Do you want to do dynamic pricing on that? Do you want to nick somebody for $10 or $30? But with the concern, these are non-trivial. Now you get to the OR, analytics, and operational dynamic tests. But that's a no-lose experiment. Will people pay a premium to sit together? If yes, now you do inventory allocation. So the big idea here is, how do you design a hypothesis that your CEO, that the business unit leader, that the brand manager, they care about the answer either way? They're not just looking to, altogether now, validate the hypothesis. So when you're doing a startup, my advice is, don't worry about the organizational dynamic. Worry about, are people coming with testable hypotheses and simple, cheap experiments that give us insight into those testable hypotheses? What's the deliverable for the CEO? A portfolio of testable business hypotheses that matter. What's a portfolio? A bundle of experiments bound together by a value-driven theme. What is a hypothesis? It's a statement about a real or potential value of the business framed as a causal relationship. Quick digression, although I'm going to come back to it in a moment. This is the sin of big data. Big data is about what? Correlation. I'm a big fan of correlation, but to use correlation as a substitute for rigorous thinking, I think, is a dangerous path to go down. Ooh, it's a 0.6 correlation. That's good enough for me. Is it to hell with understanding the mechanisms? Correlation is good. No, it's not. Okay? What's an experiment? A structured, easily replicable process to test a hypothesis. Another difference in science, because in science, you don't care how easy it is to replicate. And here's the key. You're not looking to solve the problem. You're looking for an insight. Yeah?
So do you consider surveys as experiments?
No.
Surveys are data?
No. Surveys, if you were to read the book, surveys are not experiments. Surveys are not experiments. Now, we can turn surveys into experiments, and one of the things that I've suggested to organizations, and you should do this, you give surveys and you change the order of the questions. If you change the order of the questions, you'll be astonished the variances that you see. Why? Behavioral economics, framing effects. What your first question is can have a big impact on how the other questions are answered. Okay? Even, by the way, what they've discovered, and this is fact, asking people's gender up front gives you different answers than asking gender at the end. By the way, don't take my word for it. There's a big science of this. Surveys are not experiments because they don't test a hypothesis. They're asking people for information. The interesting thing would be, the hypothesis would be, if I give you money, or if I give you something, how will you answer the questions differently? You can use surveys as a platform for experiments, but surveys themselves are not experiments. Elicitation of information is not an experiment. So what I've done, and I'll just accelerate. This is the methodology I pitch. 5 by 5 X teams. Basically, you give 5 people. This is what I've done with organizations. You give 5 people 5 days to come up with a portfolio of 5 experiments. The experiment can't cost more than $5,000. It can't take more than 5 weeks to run. And you have to demonstrate $5 million or $50 million in savings or in growth. Am I in love with the number 5? Absolutely not. I'm in love with constraints. I want people to design within constraints. So it can be 3 by 3, 4 by 4, whatever. But what I've done with organizations, what's 5 times 5? 25? Fully half of the experiments are below the median in terms of quality. Ha ha ha. No laugh. The joke goes over better at MIT. But what do you have always? Always. Because there are talented people doing it. You always have 2 or 3 and sometimes even 4 experiments where the CEO or top management says, wow, we can do that? Yes, you can, in 5 weeks and under $5,000. You're taking advantage of the law of large numbers when you have teams of people quasi-competing, quasi-cooperating to look smart in front of management. I'm going to tell you, one of the things, and these are just the constraints they present to top management. I'm going to tell you a phenomenon that I've observed doing this worldwide. People like to look smart in front of the CEO. The CEO and top management like it when their people look smart and make these kinds of proposals. People like it when top management in the organization is, and this is key, investing in their capability to become more innovative, improving their professional capabilities to coordinate and collaborate and create together. And this is going to close the loop on my being a people person here. I thought organizations would love me because this methodology would give them a pipeline of experiments that could scale and lead to all kind of innovation transformation. That wasn't false. The real thing that spiked was people loved the human capital aspect of it. They loved the fact that they were being asked to do something that they hadn't done before, and that they knew that the budget was not going to be a constraining factor on following through. Now, in the interests of full disclosure, I'm going to tell you right now, do you know how many organizations actually do the experiments? Half. Barely. And if we added more than one, more than half for doing at least one of the experiments. But it's a different way of framing things for value, exploration, creation, and discovery. What makes this work? You want to come up with business organizations. This is named for Herb Kelleher. This event is for Herb Kelleher. Herb Kelleher had a great vision. Great vision. One of the experiments that I have firsthand knowledge with, because I was an inadvertent part of it, was when they were lining people up. Because what's one of the keys to success for Southwest? You have to turn the planes around. That's something Southwest does better than almost any other airline. And with some of the airlines I've flown, better than those airlines combined. That's a return on asset thing. They've trained their customers. They did experiments. When they were very concerned when they moved to the business class. Would that slow the turnaround of the planes? They did a lot of experimentation with that. What's your vision? What's your vision? You want to get people excited in your organization, come up with a testable hypothesis associated with the vision of the organization, whether it's Google, whether it's Amazon, whether it's IBM, whether it's ExxonMobil. Or what's the great problem? Or what's the great argument? We're not interested in marginal and incrementalism. What are the great arguments your organization is having? You want to come up with a hypothesis around that. What's the biggest problem in the organization? Don't solve the problem. Come up with a fast, cheap, simple experiment that will give you insight into the problem that might influence your analysis or might influence how you approach doing a pilot. The sweet spot is come up with something that's at the intersection. This goes right back to the point about this being a craft, not a science. What are the hypotheses we can come up with that are at the intersection of our organizational vision, the problems we care about, and the arguments we're having? I think the core of this is the hypothesis. I am struck by how difficult it is. This is one of the biggest challenges I've observed, how difficult it is to get people to come up with a simple, compelling, exciting hypothesis. It's not enough to talk about it. You have to put it down on paper. And you have to see how it gets edited and modified as you go forward. I like this line from Rutherford. You know, I'm a great believer in simplicity. If your experiments need statistics, you ought to have done a different experiment. I'm not calling for this as a, I know some of you know design of experiment, Taguchi method. I'm a big fan of those things, but that's not how you create a small, collaborative, agile group. That's the next iteration, when you want to take a more sophisticated approach. Begin with something simple and compelling that everybody in the organization is going to be interested in the outcome, that everybody in the organization is prepared to make a bet on. And I like this. An experiment is not complete until it's been expressed in simple and correct English. I know this sounds obvious. It's shocking how few organizations do the obvious. Let's be fair. It's shocking how few scientists do the obvious. A lot of the interesting experiments are communicated in a very poor way. Or as Uncle Warren says, don't do equations with Greek letters in them. But what I'm asking you to do is, what does it mean to become a Warren Buffett of experimentation? What are those core things that you would invest in? What are the innovation opportunities that you can get $1 worth of innovation for 50 cents or 30 cents or 20 cents or less? What does it mean to be a value innovator, to use experiments for value innovation? So I've been doing this with a bunch of organizations. This isn't in the book. This was, to be completely blunt with you, I've just did a gig with Thomson Reuters and BT. And so I was trying to come up with some heuristics, you know, that were useful for them as they were doing versions of this. And I'd like to share them with you. Analyze less, experiment more. Privilege testable hypotheses over good ideas. Celebrate 5x5 creative constraints. We had that. We had the Google example. We had the Amazon example. We have the Blockbuster example, Mal example. What's an interesting creative constraint for your organization? The presence of people, the absence of people, the participation of customers. What's an interesting constraint? Play with the constraints. Yes, sir?
Do you know of business-to-business companies that do this well?
Sure.
Who would be a good example of something?
Well, some of the ones that I've worked with, I mean, they're companies like Paul. Maybe we can talk about. There are a lot of. I want to make something clear. I am not here to say that the scientific method is this revolutionary breakthrough. I think what you're saying. I think one of the interesting trends I've observed is that there are organizations that have done a lot of sensing, telemetry, and instrumentation. They have a lot of data, but now they're looking for signal, but now they're looking for mechanisms. And so now they're designing A/B. Well, let's use this. So you're seeing this. You know, some of the people in Violina's class would be very good for you. What kind of company are you? Yeah. So we should talk. We should talk. Look, 3M. What's really interesting about 3M, and I know your 75th anniversary book, your 100th anniversary, and Desi was doing this. It changed when you had what's his name, McNerney, because he was a Six Sigma quality guy, and that was designed to impose discipline. You were less of an experiments culture than a cut and try culture, but they're real. I think 3M is a perfect kind of company for exploring. Which group? You're in the Austin R&D group here?
I'm in
Strategy. I will say this, based on my personal interaction with 3M scientists and engineers over the years, the easy way to begin would be to ask them to propose a simple experiment for test. But here's the trick: force them to collaborate with a marketing counterpart in the business unit. on this. Make it a collaborative thing, not just an individual scientist or individual engineer thing. But we can talk offline on that. But let me put it this way. I'm also highly confident, because I know a bit about 3M, you have a lot of informal stuff going on that, in this regard. 3M has a great gray market in innovation and experimentation on this. Make experiments social. This is the advantage of having stuff like Jive and Yammer and Chat. You want your organization debating the hypothesis and the experiment. The cost of putting these things on the network, it's nothing now. It's nothing. Socialize the experiments. Do the experiments that matter most. What matters most? Not just the portfolio. And this is the cultural challenge. We're all smart. We all want to, quote, solve the problem. No. Resist solving the problem. Don't leap to the solution. Insights first. Solutions later. And this ties into the write it down and the hypothesis. Only a fragment of the organizations have made a discipline of this. You have 20 hypotheses, 40 hypotheses. Start doing semantic analysis of the hypotheses. What portion, under McNerney, the major portion of the hypotheses were process and product efficiencies. How many of the hypotheses are customer touch, supplier-oriented, category-oriented, technical-oriented? Look at the trajectory. What are we doing more of? What are we abandoning? Let's do a map of that. The hypothesis, not just a business plan, not just a research roadmap. Let's do a map of the hypotheses that we want to test. That's really revelatory. By the way, it's what the better scientists at MIT do. I do want to say, I'm not a people person, but I do want to say people aren't lab rats. I think one of the ethical challenges we're having going forward, my brother's at Facebook. He's a top dog at Facebook. Facebook runs lots of experiments on people without their consent, certainly without their informed consent. I don't think you want to treat your customers like lab rats. I don't think you want to treat your employees like rats. So the whole notion of, do we create labs and spaces where people willingly participate, or at least are aware that they're participating in experiments? I think that's a big deal. Yes?
So this sounds great, but as someone who has to do hypothesis generation as part of my job, one of the challenges that I have seen in the science domain is that it requires quite a bit of work to get from a construct, kind of abstract idea, vision, to an operationalization,
Yes.
concrete variables that
Yes.
you're trying to test.
Yes.
Can you share with us a little bit about what it takes in the context of business organizations to get from abstract to concrete variables that become executable experiments?
Well, in fairness to me, that's why I wrote a book. The useful answer, I can argue, is this is why you want to create cross-functional teams, small teams, rather than have this in the hands purely of R&D or innovation. You want to have a group of people who have close to, if not a 360-degree view of the business, saying, these are the most important things that we all can agree on. Okay? Remember, because it's a diverse group, there's going to be less agreement rather than more agreement. That bug is a feature, because there's going to be a small number of things there's going to be agreement on. Once we get agreement on that, we say, this is what we would like to know. This is the hypothesis we seek to test. And then the question becomes, how do we design something to test? And the notion, just to go back here, and this ties back to the epistemology of MBAs. The overwhelming majority of MBAs I've taught and have worked with, they're looking to solve the problem. Don't solve the problem. Get an insight. I think you're going to be able to get an agreement around a hypothesis and experiment that says this will advance us 50 to 60 to 70% of the way there. Okay? Because most people want to solve the problem. When you free them from having to solve the problem, by the way, when you give them a lot of money and a lot of time, they better solve the problem. When your constraints are such as they don't have a lot of money and they don't have a lot of time, Getting a really good insight is a pretty good deal. Getting a portfolio of insights is a great deal. Okay? That's the economics of it. So you're not operationalizing the solution to a problem. You're operationalizing the little domain where we have a consensus of what's important and how we want to test that. We want to make an advance. And that's it. Again, I can go into lab rats. I'm saying, is this the next quote-unquote innovation paradigm? I believe that with network organizations, and I know I've gone on too long, so I'll just speed up. I believe that the fundamental paradigm shift that's occurring because of the networkification of enterprise is the shift. This is Bardeen, Bratton, and Shockley. From R&D, research and development, to experiment and scale. I like to call this accordion innovation. You can run an experiment with 10 squared people, use your network, scale it up to 10 to the 4th. Whoops, we have issues. We'll bring it back down to 10 squared. Fix it, scale it back up. Networks and networkification reduce the economic cost of scaling. You can convert slowly experiments into products, services, and user experiences. Now that's not the simple, cheap, dirty experiments that we're discussing, but that's how we package them together, and we use, just to be slightly technical, APIs. We create interoperability between things we're developing. But the networkification of enterprise and markets shifts the economics of innovation away from our classic linear R&D to the ability to run an experiment and scale it, a la the Ubers and Amazons and the born digital companies. I am of the view, back to 3M and large organizations, that big data really requires little experiments. I think that's the double helix that you want to go for. If there's a single thing that scares me as I work with organizations seeking to do predictive analytics and get more value out of their petabytes and exabytes of data, it's that they're giving up on experimentation and substituting regression and K-cluster analysis for doing a simple experiment. Whereas a simple experiment could dramatically inform and focus the data. Yes, sir?
What role does organizational maturity play in that?
What role does
organizational maturity? I mean, you're mentioning
You-
Google and Uber, these smaller,
You are-
more culturally adapted. But if you have a 150-year-old organization that's huge and de-risk, very sensitive, they're not going to suddenly introduce a culture of experimentation.
No.
Instead, they're going to use big data and analytics to try and approximate that.
You are, I think that it's an app, you are correct, okay? And so I'm going to give you a legitimate cop-out answer. They're not going to be a 50-50 or 40-60 data to experiment, but little experiments represents an analytics diversification for them. So the value proposition you make is that those petabytes of data, we can make it more valuable, more accurate, more targeted, more focused if we consider exploring these kinds of in silico experiments and these kinds of real world experiments. That's a business case I can make. So it's going to be a diversification issue. You're absolutely right. The idea that we're going to transform an old line financial services company to an experiment, that's ridiculous. It's like, in honor of Herb Kelleher, it's like saying to American Airlines, do you know what would make you more successful, American Airlines? Be more like Southwest. You'd be thrown out of that. You'd be thrown out. Yes, the planes are the same, but the culture and all it's different. Actually, the planes aren't the same because Southwest standardized on 737s, and by the way, this ties into a theme that I mentioned in Violina's class. Some companies, like American Airlines under Crandall, their bet was our business model will work because we can manage complexity better. And they had Tom Cook and they had all the OR people there. What was Southwest business model? We'll win because we manage simplicity better. By the way, both simplicity and complexity require experimentation as a risk management capability. For the simpler organization, experimentation can be more useful for value creation. For the larger organization, you use experimentation to manage risk. Okay? That's a non-trivial point. Now, we're also living in a time, just to wrap up, We've got big networks. We've done not just big data. We've got multiple processors. What happens to innovation process and culture when we can start not just running a couple of experiments, but tens of thousands or hundreds of thousands or 1 million experiments concurrently? This is happening on Google and Amazon even as we speak. This exists. This exists. Okay? That's born digital. They're the early. Are we culturally and organizationally able to adopt and adapt and take advantage of that? Part of my background now is in machine learning. I think one of the most important things organizations need to consider, and I'll just pick on 3M over here. AI is artificial intelligence. That was my background. That's what I studied in school. Actually, under a guy who studied under Alan Turing, for those of you who've seen the Imitation Game, Donald Mickey. AH is automated hypotheses. We use AI to solve problems. I'm telling you, one of the smartest things you can do in your organizations is use the data that you have to generate testable hypotheses. Don't just rely on your creative people to come up with business hypotheses. Come up with machine learning in your data to generate these things. And you'll pick, ooh, that's an interesting correlation in a hypothesis. We should do that experiment. So I'm going to end the way that Ronnie Kahavi, who runs experimentation at Microsoft, begins his talks. He says we are poor at assessing the value of ideas. By the way, he gave a very nice review. He gave the best critical review of my book on Amazon. So he runs not just experimentation for the websites, but all over Microsoft. So find a house widget. This is the OEC, the overall valuation. Revenue to Microsoft generated. Each time it clicks a find button. Which one would be better, A or B? And he asks people to stand up. Raise your right hand if you think A wins. Raise your left hand if you think B wins. Don't raise your hand if you think they're about the same. The answer is A was 8.5, non-trivial, 8.5% better. Office Online, test new design for Office Online homepage. Operating criteria, click on revenue generating links, red below, A and B. Raise your right hand if you think A wins, left wins, B wins. Don't raise your hand if you think they're about the same. If you raise your left hand, please sit down. B was 64% worse. A/B testing is a fun. Microsoft didn't do this. There's a political reason why they didn't do this, but last one, search page. There's the magnifying glass. There's the search. Taller search box, big button. Raise your right hand. His view is if you raise any hand, sit down. Stop debating. It's easier to get the data. Do the experiment. Do the experiment. 10, 15 years ago, doing experiments was expensive. Now, not doing experiments is expensive. They're a vehicle for managing innovation, risk, and insight. This is my concluding quote. We're not smarter than our parents. We're not smarter than our grandparents. We have better tools, techniques, and technologies for managing innovation, insight, and risk. Does anybody in this room think that the next 10 years of technical innovation are going to be less interesting than the last 10 years? So shame on us if we don't take advantage of the new economics of experimentation that this invites and encourages. Those are my remarks. You've been extraordinarily patient and generous with your time, and I want to thank you for the honor of giving this talk. Thanks. Open for any questions or comments that you all have.
Yeah, if you have, given what you're talking about, organizations today do less experimentation than they do.
Yes.
And that's done by individuals. But individuals are rewarded for solutions traditionally within organizations.
You're correct.
So how do we change the structure to encourage the reward for new experimentation?
Well, I think you answered your own question. I think that people are rewarded for solutions. They're not rewarded for doing experiments. I happen to work for an institution where we are rewarded for doing experiments. You can get tenure for that kind.
But how do you encourage? I mean, I guess I'm asking you, how would you approach any of the major company CEOs that you've mentioned today, or leaders in their HR departments, to encourage them to find a methodology for rewarding them for experimentation? Because it seems to me your own hypothesis is we have to do more of these small experiments So how do we get companies to do that?
Right.
And the individuals within them?
Right. I think a completely legitimate question, and I can only go off of it. First off, statistically, there's an enormous sample bias here because I've run these workshops with organizations that have invited me in. So the question is, why? What explains it? I'm not expensive. The experiments are, this would not work. Was that this is a great methodology, give me $500,000. Okay? It works because it's inexpensive. It works because you're sending a signal that you're interested in having your people collaborate and in improving their human capital and their capabilities. The issue, what I think changes an organization's culture is, I think it's the camel's nose under the tent. How do you get people when they make a business plan or proposal? Let's take from the world of venture capital. When I began doing work with venture capitalists and started, people would give you a business plan. By the way, I'm sure you guys have a business plan competition. At MIT now, we don't really take business plans seriously. We have to see some sort of a prototype on this. Now we can call a prototype an experiment, but a prototype is a hypothesis. It is it's testable. It allows some sort of experience here. So my serious answer to your question is, I think you look at where are the existing processes, where can we improve their economics by attaching a hypothesis or proposing an experiment to that. So if I'm 3M, I'm going to say, before we give you $50,000 to do a production prototype, we want you to propose a $5,000 experiment. Give us a hypothesis for testing and have people review these things. But the reality is, it's why I have the picture of the animated figure banging its head against the wall. You've identified the exact issue. It's not the money, it's the culture. I think it's going to work, frankly, because successful organizations like Google are, the academic conference is KDD. Successful organizations and successful professional research groups are publicizing the experiments that they're doing. I think that's the way the culture, it's going to be competition. And I'll go one step further. You know, it would be a good thing if some of the leading business schools would say, you know, it's fantastic that we give you world-class training in analytics. We also want to have a workshop or a module where you're designing business experiments. Perhaps Professor Andover can be a leader in that. Any other?
On that.
There's one gentleman.
One benefit of experimentation that you haven't really mentioned, but I've experienced at IBM and at TI, is conflict resolution. People get incredibly dug in to their positions. They stake their reputations on get into bloody fights. And you can settle it usually with an experiment. If you can settle it with an experiment, you save a lot.
You are completely, I could not agree with you more. And Ronnie Kahavi has a wonderful article. He calls it the hippo, the highest influential person in the room making the decision. How do you become data-driven? You have experiments or something. You are exactly right. I will say, though, one has to be careful because there are some people who are sufficiently vested in their point of view that the experiment is going to be interpreted as an act of rebellion and insult rather than a contribution to the sum of knowledge. So the politics of experiment are just as intense as the politics of analytics. And you're now identifying a larger issue, which is, you know, I did use the E word earlier, epistemologically, how do organizations want to balance truth and value creation in the enterprise? I think experiments are a wonderful way of promoting a more honest and open organization. And you're absolutely right, but 9 out of 10 times, it's been my experience, 9 out of 10 times is an exaggeration. 4 out of 5 times, there are oftentimes political roots to the conflict, not just scientific or engineering roots to the conflict. But you're absolutely correct, and I appreciate your pointing that out. you definitely have suffered enough, particularly for a Friday night, but I want to thank you again. So.
Well, thank you.